Crypto Caesar Capital, hope you are well. It's New Year's Eve 2025, so 31st of December. And this, of course, will be the last video for 2025. So I hope you all had a good 2025, and I hope you all have a splendid 2026. We can't really say that for Bitcoin in relation to 2025. It was essentially... It opened the year around about 93, 92, 93K, and we're below that right now. And my view is I think a lot of the bid was taken away from crypto with AI stocks. And gold had a good bid as well, and that hasn't really rotated into Bitcoin. We might see a better 2026. That's possible, but I think the likelihood is now, given that Bitcoin found its low all the way back in November 2022 at around about 15 or so K, and went from there to 126K. It's a 702% or thereabouts move. I think it's arguable that that could well be the high now for Bitcoin. But, let's see what happens. And let's look at what the charts are telling us now, because that's what we really need to know. This is the important thing, because if we are rolling over into a bear market and you are still holding Bitcoin and you want to preserve that capital, or indeed altcoins, you want to preserve the capital, then you need to start acting decisively fairly soon. My view is that there's going to be a bounce, okay? And where that bounce goes is going to really dictate whether we're rolling over into a bear market or there's continuation into a bull market. Let's talk about the bounce first, and then we'll talk about the price points after that. But essentially, as you can see, Bitcoin had its high back on 6th of October, 2025, and it had a big dump to the downside of 36.32%. So a fairly decent move to the downside. But right now, I think everybody is sort of thinking maybe we're going to go lower, down to about 74K. I think that's possible, but my experience is telling me that I think this is probably the low. The 80K was probably the low, and I'll tell you why. Number one, fear and greed index. If you look at fear and greed index, we've had it's extreme fear. Yesterday was extreme fear. Last week was extreme fear. Last month was extreme fear. The month before that was also extreme fear. In fact, with regard to the fear and greed index for Bitcoin, Bitcoin has never, or has historically never remained in extreme fear for as long as it has now. And that suggests to me that there is likely to be a bounce, because bounces come with, extreme fear, not in euphoria. So that's the first reason. The second reason is we've got a bullish divergence here on the 3-day. I'm looking at the 3-day chart. So we had the ultimate low here on the 18th of November. Oh, sorry, the low on the RSI on the 18th of November, and which was around about 86K. We're not including the wick for bullish divergence. And you can see that, in fact, that low, if we look very closely, this low was 86K. Then we had a lower low of 86,131. The first was 86,536, and the next candle body without the wick low was 86,232. So it's a lower low in price and a higher low in RSI. That means that the market is looking to potentially turn around. It's not as weak as it looks, because we've got a divergence between the price and the RSI. And secondly, thirdly, we've got the logarithmic MACD here, which we've had this big bearish the histogram was extremely bearish. It started to wane off here whilst the price was consolidating. It's waning off, and now we've got a bullish cross, if you look closely here, on the MACD. So that to me suggests that we're going to have, a bounce soon. So we've got the fear and greed index at extreme fear for a couple of months. We've got a bullish divergence on the RSI on the 3-day, and we've got a bullish cross on the logarithmic MACD. So that suggests to me that the bullish momentum is probably over, and the likelihood is that it's going to take a bounce. The big question is, where's it going to bounce to? And there are some price points here which are really quite important. Firstly, we've got this horizontal resistance area around about 107k. Remember, this acted as support for quite a considerable amount of time, from about July 25 until October or November 25. So quite a few months of support there. This is now the horizontal resistance. We've also got the bull market support band coming over, and we've got the 200-day moving average. The 200-day moving average is really important because, in a bull market, price needs to really remain above the 200-day moving average. And if it doesn't, it needs to get back up quickly above it. Otherwise, once it starts posturing to the downside, that suggests that the trend is changing and the trend is coming down. So where's the bounce going to go? Well, at the moment, we're stuck in a range, which is probably, in my view, being dictated by the options market. You've probably seen a lot on Twitter about this, but the price seems to be jammed essentially between 85k or thereabouts and around about 90k. That seems to be where the price is jammed. Whenever it gets up to the top, it rejects, comes down to the bottom, etc., up and down, stuck in this range like a ping pong, going up and down, up and down. But the indicators suggest to me that there is likely to be, probably in January, I would have thought, a resolution to this range. And given the indicators I've mentioned and the fear and greed index, the likelihood is, I think, that the resolution of this range will be resolved, but to the upside. The question then is, where does it go? Well, we've got the 200-day moving average above. We've got the horizontal, which used to be support, which is now resistance, and the bull market support band. If we are in a bear market, the likelihood is that we come up somewhere close to the 200-day moving average, and then it just rejects off, and then we come down to make our ultimate bear market low at some point in 2026. So if you are looking to exit the market, I would be looking to exit between sort of 100, say 98k, up to about 106, 107. And that's because we've got the 200-day moving average there. And if you actually look in the history of Bitcoin, well, let's look at it on a clean chart, we can see, and this is on a weekly time frame, we can see historically, every time Bitcoin has rolled over into a bear market, it always comes back to test the 200-day moving average. So this is the cycle in October 2021, where it made its high of 69k or so, big drop down of about 50% or so, and then it came back up to test the 200-day moving average here in blue, ultimately rejected, came down. And you can see that the 200-day moving average was postured either flat or to the downside, suggesting that the trend had changed to the downside, like I mentioned a moment ago. That was the last cycle. And then if we look at the cycle previous, back in 2017, 2018, we've got the ultimate higher price around about 20k. Price comes down, big dip, probably 50, 60% move to the downside. Then the price comes back up to test the 200-day moving average, and then finally rejects and makes its final low. It does a similar thing as well, I think, in the previous cycle. So we've got the ultimate high, comes down from the high, up. It actually was able to stay above the moving average, but you can see the 200 days postured to the downside there. indicating a change of trend. And yeah, down, up, tried to hold it, couldn't do it, then boom, up again, down, just trying. But this is the point, the first test of the 200-day moving average, where probably the best time to take, to get out of position if you are in position. That time, the first time there, with price was at 10K. This was, the 20K. So, and then in 2021, price went from 69K all the way back down, then came up to about 50K or 48K, depending on which chart you look at. So if you had actually taken profit here, which is where I actually took profit on the last cycle, we took profit here to begin with in April. We were lucky. We didn't suffer this drawdown. We repositioned here, rode it up, thought it was going to 100K like everybody else did. Didn't quite do that, came back down. That was the point at the test of the 200-day that we exited our positions, and then there was a nice downside move there, which was a short all the way down, a 67% move to the downside. So my point is that the likelihood is at some point, either in January, it could be later, because if Bitcoin doesn't make this move, as it were, and drops down to a lower price of, say, it fills this wick down to 80K, okay, it's going to take a little bit longer probably for there to be resolution of coming back up to the 200-day moving average. But if we're holding this area, this sort of range, and we can hold this, and then Bitcoin in January comes back up, I think in January it's likely to test, say, the 200-day moving average coming down. It's probably going to test the 200-day at that point. But as I say, if the price drops down below this area of or this range, comes down to sort of 80K or 74K, whatever it might be, then it's going to come back up at some point to test the 200-day moving average, but it might take longer to resolve. That would probably resolve more likely in sort of March, April time, rather than January time. So really, it's about what's going to happen now. My view, as I say, for the time being, is it just looks likely to me that Bitcoin is going to try and test the 200-day moving average in January. But if it doesn't, I think there is a very, very high probability, sort of 70-80% probability, that it will at some point, whether it's in January or April. At the moment, I think it's going to be in April, but if it's I think it's going to be in January, but if it's in April, it's in April. For me at the moment, I don't really see any point selling my positions now, given that I got in between sort of 18 and 15K. I'm quite happy to take a little bit of pain to the downside and then take profit at the 200-day moving average. But really, that is going to be where the test comes. The 200-day moving average and this horizontal resistance, that is the ultimate test in January for Bitcoin. If Bitcoin can get above the 200-day moving average and above this horizontal resistance, I think there's a very high likelihood we see a continuation to new highs. But at the moment, my view is, I think, we've got to be realistic. I'm not going to be holding on to my bags forever. I'm a position trader, so I want to try and preserve some capital. So I've got to be realistic. And at the moment, I think the reality is that the likelihood is, I would say, 70% chance that the bear market is on the horizon. So therefore, I want to preserve some capital. So if the price gets up to, 100K plus or thereabouts, or around about where the 200-day is, I'll be looking to take profit there. And then I'll wait, and if the price continues and is able to get above the 200-day and hold 107K support, then I'll re-enter the market and I'll pay a little bit of a premium because of it. But I'd rather pay a little bit of a premium of, say, 5, 10, 15% than suffer, a huge sort of 50% move to the downside, a 60% move maybe. But that's where I am with it all. So I'm thinking at the moment, likelihood is we're going to get a bounce. Where that bounce goes will dictate the way that this market will go, whether it's a bull market or a bear market. We've got the 200-day moving average, 200-day SMA. And my view is that the likelihood is, if we are in a bear market, it will reject off the 200-day, and then it'll roll over into a bear market, which will probably resolve itself at some point towards the end of 2026. Maybe sooner, who knows? But likelihood is the 4-year cycle looks as though it's playing out as normal. So I would be looking to take profits from around about 98k all the way up to 107. See what happens. If I have to pay a premium on that, I pay a premium on it. But given that we took our positions at such a low price, I'm happy to be taking profit up there. We'll see what happens. As I say, we've got a bullish divergence on the 3-day. We've got a logarithmic MACD bullish cross, and the price seems to be pinned between sort of 90k and 85k. And I think, once everybody gets back to work on Wall Street in first week of January, I think there's likely to be some form of resolution one way or the other. As I say, my view is I think the resolution is going to be up and then probably down, but we shall see. Anyway, that's a video for today. I hope you are all well. I hope you have a great New Year's Eve. I hope 2026 is a good year for you and your families. And I shall, of course, be back in the new year with a new video. And it'll be quite interesting to see, won't it, what happened with this range, which way it resolved itself, whether it was up or down. As I said, if it's down, I'm going to sort of here to 80k or 74k, then it's going to come back up and test the 200-day. But of course, that might take longer to resolve itself, likely to resolve itself in sort of March, April time, rather than in January. And the 200-day at that point is going to be lower because it's obviously moving down as it's postured to the downside. So the 200-day at that point could be at sort of 98k or 100k. But anyway, let's just see. Let's just see what happens. Most important thing to do is preserve your capital. A lot of people in my group got in between 20k and 15k. They've had a good run with Bitcoin. So it's important that they preserve their capital and just wait for the bear market low and go in heavy at that point and ride it up again. Anyway, there we are. So 31st of December 2025, last video for this year. Take care. Speak soon. Thank you very much for listening. Bye-bye.